Alright, so get this. I'm sure you're going to be just completely shocked by this. We had the Dodd-Frank Act passed basically 2 years ago, practically, that mandated the CFTC, Securities and Exchange Commission, namely for this point in this video, CFTC, you guys need to step it up, do something, because there's, people crying foul about market manipulation, silver manipulation specifically, and some other commodities, oil prices, which also happened in 2008, right, as predicted flawlessly by Lindsey Williams because his oil executive friend told him so, that it would go from the current $70 or whatever it was at to $150, and then after that they would crash it down to 50 for about 6 months of 2009, which they actually did. Incredible. So, anyways, the point of this video is the CFTC was given a deadline. We need you to have something implemented by this time frame, which supposedly I think was supposed to be January of 2011. Yeah, like almost a year ago now. And they put it off, and we're looking at these things. It's going to take a little time. We're sorry it's taking so long. We want to get this right, blah, blah, blah. And, of course, manipulation up and down, you name it. JP Morgan just having a field day whenever they felt like it. So they had a September 22nd meeting originally. CFTC, the commissioners, the ones who set the rules. And they said, now we're not going to have it on the 22nd. We need to reschedule it to October 4th. We'll get together on October 4th, and we'll see about voting on it. And then comes a little news story. Well, 4 out of 5 of the CFTC commissioners, we don't know if we really like the position limit thing the way it's written right now. And, we don't want to scare potential money overseas. We want it here. And position limits might scare people overseas to overseas markets, So we really need to think about that, guys. 4 out of 5 thought that way. Shows you who they're working for. Not that we didn't already know. So, then, of course, we're only on the 27th today of September. We're not at October 4th when the meeting's supposed to take place. That comes later, right? So, a week from now, we should be hearing about, oh, good, October 4th meeting. Is it going to be televised? What are they going to say? Can't wait to read the news that day. And then all of a sudden, I read today, quote, regulators delay position limits again. And I don't mean again from the 22nd of September when they should have passed it and then said we're going to do it on October 4th. I'm not talking about that one. I'm talking about another one. We're delaying that one again. Federal rules set to rein in speculative commodities trading face further delays as regulators struggle. Boy, they struggled for a long time now. Should have been something that took them a month or two to come up with, to tell you the truth. But here we are, almost a year past the deadline, by the way. So they're behind, at least over 6 months behind. So, whatever. Let me read this. Federal rules set to rein in speculative commodities trading face further delays as regulators, specifically CFTC regulators, struggle to finalize the controversial proposal amid threats of legal challenges. The Commodities Futures Trading Commission, CFTC, decided on Tuesday to push back an October 4th meeting during which the agency had been scheduled to vote on the rules. The Commission's chairman, Gary Gensler, is expected to notify his fellow commissioners that the agency is likely to take up the proposal instead on October 18th. Darn. Bart Chilton, who appears to be on the people's side, but sometimes you wonder about that guy. Is he really, or is he just putting on a front? It's hard to say. A Democratic member of the agency had a devoted supporter of the so-called positions limits plan lamented the delay. Quote, I continue to be troubled by the pace of implementing position limits as Congress has directed, he said. The agency, which must enact some 50 new rules under the Dodd-Frank financial regulatory overhaul, has struggled to keep pace. Oh yeah, boy, have they struggled to keep pace with something that's seemingly pretty simple to implement almost right away. It's now been dragging on for many months. And then 22nd of September turns to October 4th. October 4th now turns to October 18th. Incredible. And is something going to happen in between now by chance, little coincidence, right? Big earthquake, big terror attack, something that, oh, shoot, we were just getting ready to vote on that, son. We're your boys, us over here in the CFTC. We're getting ready to vote for the people. But something happened, and now it's all shut down, so we're going to have to wait till next year. Imagine if that happened. So, the agency, which must enact some 50 rules under the Dodd-Frank financial regulatory overhaul, has struggled to keep pace. It already announced plans to push some rules into 2012, a delay of more than 6 months. The agency's decision on Tuesday was the latest in a long line of setbacks for the position limits plan. Under the Dodd-Frank Act, the limits were supposed to kick in during January of this year, not 2012. Then the commission planned to vote on the proposal in September, but delayed it further to bolster the cost-benefit section of the rule. That's why. Okay. Quote, I want to be sensitive to the costs. Scott O'Malley, a Republican member of the CFTC, said recently. I want to be sensitive to the costs. Yeah, you want to be sensitive to the cost. And so does Congress with their 14 turn to 16 trillion, turn to 20 trillion in the near future, turn to 30 trillion in the near future after that. Yeah, there's you want to be sensitive to costs. First time ever government wants to be sensitive to costs. Right. The position limits would cap the amount of futures contracts that a single trader or firm can hold on 28 different commodities such as oil, wheat, corn, and others, of course, namely silver and gold. A response to wild price fluctuations that can hurt consumers at the gas pump and in the supermarket. Existing limits apply to only 9 items currently. They want to put 28, one of those being silver and, of course, gold too. The proposal has emerged as one of the most contentious matters stemming from the Dodd-Frank Act. The regulator received a barrage of letters about its plan, some 13,000 comments in total, some from supporters like Senator Carl Levin, Democrat of Michigan, who wrote that the plan was a critical step to stop excessive speculation. I would strongly agree. But many responses came from unhappy Wall Street trade groups. Some industry lobbyists and lawyers note that Dodd-Frank leaves it up to the agency to enforce position limits only, quote, as appropriate, raising the question of whether limits are at all, in fact, necessary. So that's an interesting statement because it says some lobbyists and lawyers note that the Dodd-Frank Act leaves it up to the agency, the CFTC, to enforce the position limits only as appropriate. So you may find that if you have even October 8th, they get this put in place. We're putting limits on this, position limits on that, position limits on that. But you know what? We've looked at a lot of data in the silver market, and we don't feel it's necessary to put position limits on silver. Or they'll go ahead and do that because that's the whole reason this was put together. And then something like oil. Well, we don't want to do it to oil because that's how the elitists control the price of oil per Lindsey Williams on Wall Street. So that's the only way they can control the price of oil and, as you see, silver or any commodity for that matter. So, but many responses came from unhappy Wall Street trade groups. No, you don't say. Some industry lobbyists and lawyers, other groups have been, let me go back where I was. But many responses came from unhappy Wall Street trade groups. Some industry lobbyists and lawyers note that Dodd-Frank leaves it up to the agency to enforce position limits as only appropriate, raising the question of whether limits are in fact necessary at all. Yeah, they are necessary. Other groups have issued thinly veiled threats of legal action. Good luck with that because it ain't going to happen. In March, for instance, the Futures Industry Association urged the Commission to scrap its position limits plan, saying it, quote, may be legally infirm. Right. Sure. The threats have resonated at the agency in the wake of a recent court ruling that struck down another Dodd-Frank rule. In July, the United States Court of Appeals for the District of Columbia Circuit rejected the so-called proxy access rule by the Securities and Exchange Commission, rebuking the agency for not fully evaluating the rule's economic effects. But that's a far cry from what they would like to do with the position limits and just knock it out of the way completely. And then he ends this. This is actually from Harvey, Oregon. He posted this link to that story. And he says, "Today I received a photo of a sign at the Bank of Nova Scotia, Canada, stating that they sold out of precious metals. The Bank of Nova Scotia is the only bullion bank in Canada, by the way. Can't confirm or deny that because I actually looked on the internet to see if I can find anything, and I was not able to. And there are multiple banks, I think, or entities that act as part of the Scotia Bank, so there's different branches, so to speak, and it may have been a branch of that may have been out. It's hard to say, I don't know. But what is this showing you? They're dragging their feet, they're dragging their feet, they're dragging their feet, and no matter how they drag their feet, people still want physical gold and silver. They're still going to try to collapse the prices down like they just did on the paper market of gold and silver. And in all honesty, it looked like, as I mentioned the other day, they're supposed to have a meeting on October 4th. We're getting really close to that. This could have been the Hail Mary of J.P. Morgan and Company. This is all we got, guys. Throw everything in the kitchen, put the kitchen and the kitchen sink at them. Let's see how far we can push silver down. And it stopped now at $30, basically. Nowhere near enough to probably please them, I don't think, anyway. So now that we are at $30 silver, they threw everything in the kitchen sink, and we have days away from October 4th, where this new rule would be voted on and likely voted in. Apparently, it should be. Only to find out, nope, we're going to scoot that off till October 18th. We're not ready yet. And again, wouldn't it just be a massive, unbelievable, incredible coincidence if some big event, whether it be a terrorist attack, a big World War III starting event, a massive earthquake on the East Coast that knocks out Wall Street, just something, just by chance, stops them from voting on the rules implementation of the position limits. And we will further let you know at this point it's indefinitely off until we, rebuild or whatever happens. Like, just, let's put it on, let's really press the pause button. And then, of course, J.P. Morgan and friends would still have control to manipulate the markets as they do. Not that it really matters, because as you see what happens when they push the price down, it is a huge double-edged sword. People rush in and take the physical while laughing off the market loss. Don't care about the traders, don't care about the paper pushers. None of us do. They're basically a leech on society themselves by playing the game of the bankers, which is one-sided, as they just found out. Devastatingly found out. Meanwhile, the rest of us are piling in for the real thing. So if we continue to pile in, if they keep pushing it down, and we continue piling in to buy it, what happens to the physical silver that they will have to have in their possession to cover any of the deliveries demanded by anyone who decides to still play the paper game? There won't be any. They're going to have, APMEX is out, Monex is out, the United States Mint is out. We're waiting on, blanks or whatever of silver to come in to start minting them. Yeah, but they're still being traded on Wall Street right now on this, the stock market and futures. You can play it. They have to back it, don't they? Well, yeah, they do. Well, then, of course, someone's going to get the bright idea and say, well, I guess in that case, let's put a futures contract out there right now to, $500 million or whatever one of these big companies has, APMEX or somebody. We'll pull in the silver by demanding delivery, pull that silver in because we got customers waiting on physical, and we'll have it minted. Who knows? I'm just throwing that out there as a possibility. And, there's other countries, too, that could do the same thing. But that's all I want to share with you. They're pushing this on further and further and further. So what does that mean? Could there be another push down, punch in the face to silver and gold? Again, even though it already got smashed, silver got smashed down to $30 now. Could they let it go up a little bit and then do it again down to 25 or 20? Anything's possible when you have a massive amount of paper for a tiny bit of silver. Remember, 100-to-1 ratio at least with silver. 100 pieces of paper, all say they all own 5,000 ounces of silver. That's 500,000 ounces of silver that they claim to have on 100 contracts. Yet, the realist reality is that there's only 5,000 ounces sitting there to cover those 100 contracts. So if one contract says demand delivery, give me the 5,000 ounces, it's gone. The other 99 are out of luck. But since for so many years now, many years, no one demands delivery, really, just a tiny percent of a percent, like not even 1% basically, barely 1% sometimes, demand delivery. So the other 99% are just pushing paper back and forth. So if you as a banker, JP Morgan, whatever, metals dealer, on the paper scene anyways, see that, well, let's try to pass rules for Congress and everyone to put into place to allow us to put out more paper than you can ever imagine, since no one ever demands it anyways. Okay, well, we'll create a CME group out of Chicago. They'll set those rules and things, and they'll keep an eye on that. Is that a government agency? Well, not really. It's actually a privately owned agency, which I believe is somehow subsidiarily owned, something to do with JP Morgan. So, boy, that's a pretty big conflict of interest, isn't it? The guy that's shorting it, JP Morgan and Company, also owns the CME group, which sets margin rates whenever they feel like it, as we just witnessed Thursday or Friday, massively, and can push the price in conjunction with each other and set little rule changes and little things that it can do, the CME group. So, anyways, that's all I got for you. They're going to drag this out like you would expect. They're going to drag it out as long as they can. They're going to ride that horse until it dies. And it may be dying here very soon. Like, literally, maybe they'll finally get this stupid thing passed in October. Position limits, done deal. You have till such and such date to comply fully. End of discussion. And I would have to ask everybody, if they did do that, what does a person or a company like JP Morgan, who owns like basically half the silver market in paper anyways, what do they do if they have to comply with you're only allowed to own X amount of contracts? Okay, how do they get rid of those contracts? If they have half the silver market, they have to start selling them off, right? I mean, so you would think, how else are you going to get them out of JP Morgan's hands? So if they start selling them massively, of course it's going to cause silver to come down way down to get themselves out of their positions. But at the same time, you know, as they say, there has to be a buyer for every seller. So as JP Morgan's selling all their positions out to comply with the new rules of the CFTC, there has to be buyers of just average people. But at least once that takes place, you should safely be able to bet that the manipulation would stop, except for the CME group deciding periodically we're going to raise margins. Well, we're raising margins again. We're raising margins again. That kind of thing. So I think ultimately, and I mean ultimately, the big picture, not in the near future per se, further out than that. Not that it matters because we are all long-term investors in silver anyways, physical. This is long-term. But the point is we're going to pull in the physical silver overall. So it doesn't matter if they want to raise margins and do this and do that. Sooner or later, they're going to come to the crisis level of we don't have the physical thing, item, in this case silver, and we're still trading stuff on the market. Oh my God, what are we going to do? And once that happens, no matter what the CME group does, we're raising margin requirements, we're doing it won't matter. It will not matter anymore because there's going to be a shortage, physical shortage of silver, where you call everywhere and they just don't have it. And then the next response from them is, to tell you the truth, we're not sure when we're going to get it either. We're waiting on the mining companies to, pile in on some silver. That could be out in the distant future, 2 years, 3 years, 4 years. I don't know. I really don't. But are you going to be upset when this is a long-term investment and you realize 4 years out into the future, let's pretend we're there now, and you look back at the prices, 30, 40, 50, whatever happened in the past, which the past would be now, and then you see $100, $200, $300 silver just going crazy, big influx of people wanting to buy it. There's none around. Dollars are collapsing. I mean, this is 4 years from now. I'd say dollars are going to been collapsed by then. And you're not going to be upset that you had to wait an extra year than you thought, or an extra 2 years than you thought. Most people say, well, I worked, 40 years my whole life. I've been working in the workforce for 40 years. I had a 401k or some kind of retirement, and I did it for 40 years. Sure, the market went up and down the whole time, but I was constantly putting money into my retirement, and now that I'm, 40 years, I've got, $300,000 in retirement or whatever. We're talking about major money like that, in the span of a few years of investing as opposed to working your whole life to get the same thing. Also assuming you have enough money to buy a significant amount of silver right now. Anyways, that's it. I get off these little things and I start talking about other stuff after I've said, okay, that's it 50 times. So, have a nice day, or in this case, night, and we will see what tomorrow brings for the news, realist news, and you guys.